Hey, welcome to an episode of Mind Something. If you're new here, my name's Jake, and in today's episode, we're going to talk about diversifying your hash rate. We're going to talk about Hiveon adding some new pools. We're going to talk about Hetzner and their anti-crypto policies. And then lastly, we'll talk about Coinbase and is it going to support the new proof of work fork from Ethereum. So without further ado, if that kind of content sounds good to you, do me a favor, hit that like and subscribe button for me. So let's take a look at the farm real quick. As you can see, I got 4 workers here in Hiveon, Alderaan, Coruscant, Naboo, and Tatooine. Yep, I know, it's pretty nerdy. What can I say? But let's go into Alderaan real quick. And this is a rig that consists of 6 3070 Ti's, all founder editions. It is currently mining Ergo. The next one is an all AMD rig. It consists of a 5600 and 5 6600s. It is currently dual mining ETH and Caspa. And then next up we got Naboo, which is an all Founders Edition rig also. That consists of 3 3080s and 3 3070s, and it is currently on Ethereum as well. And then lastly, we got a mixed rig. This one, Tatooine, currently has 2 3060 Ti's, a 3070, a 3080 Ti, all of which are Founders Editions, a couple of 5600 XTs, and then a 3070 Ti by Asus. Now, this one is currently on Ethereum only as well, and I have a tendency to kind of jump around in the day depending on the heat. Now, you may be in a scenario similar to mine where you're having to do the same thing, but I just wanted to point out that it is going to be pretty important that you already have flight sheets set up for all of these different algorithms when it comes time for the merge. And if you're not already familiar with creating flight sheets that allow you to mine multiple algorithms simultaneously, just something that I wanted to bring to your attention and kind of give you some instruction on that. So looking at this current NB miner flight sheet, if you go to the setup miner config, you're going to notice down here at the bottom the extra config arguments. Now you may or may not be familiar with this, but what I want to point out here is if you just mouse over, you're going to see the commands specifically for that miner, in this case being NB miner. If I wanted to include or exclude certain devices from mining that particular algorithm, I would just simply select it, it will input it for me, and then I can edit which GPUs I want it to mine. This is essentially going to exclude the others. So, for example, in a mixed rig, if I'm using NB miner, I could tell it that devices 0 and 1, I would like to dual mine ETH and Caspa, but the additional 6 or 7 GPUs in this rig, I only want it to mine Ethereum. You can also set up flight sheets. Let's say, for example, if you have a mixed rig where you can do Ethereum for your NVIDIA cards, and then you can set up Team Red Miner to mine on your AMD cards on a different algorithm. So there's a lot of variations here and a lot of tools that HiveOS provides to you guys to make this process a lot easier. Now, if you want this covered more in depth, I'd be happy to go over some of this stuff, but there are plenty of videos out there for you to check out. But if you just can't find what you're looking for, let me know. Leave a comment down in the section below, and we'll take care of that. So let's take a look at what to mine at the moment. Farm today is coming in at $35.11 in revenue and $25 a day after power. Now, that's pretty terrible. It wasn't but maybe a week or two ago, we were sitting at about $45 per day in revenue and about $36 a day in profit. And it's getting tougher to stomach, but you know, we're still going to continue to mine all the way through the merge, and will most likely shut down, clean GPUs, and work on the solar system in preparation for this time period that's going to be unprofitable. But there's something that I wanted to talk to you guys about in regards to Ethereum after the merge. And there's something there that caught my eye in TradingView that I just wanted to point out to you guys. So this is looking at the weekly chart, and as you can see, in our previous bull run, we dropped about 94% over the course of 343 days from the peak to the bottom. Okay, so if we were to repeat what we did previously, then you can see we still have a ways to go. We are currently, well, if I say currently, we are currently about 71% off of the high and about 287 days into this. Now, if you go by what the bottom was previously, that was around 81 or 82% over the course of roughly 210 days. But if we've got 343 days total until we get to the bottom, that's going to push us out to, I think, November. Let's see here. Close enough. We'll say 350 days would put us in the end of October. But if we go down to 94% from the high, and this is the scary part, guys, that puts us at $262. Now, I contemplated selling a significant portion of my Ethereum whenever the merge was supposed to happen. But it looks like we may have already hit our recovery rebound, and we could possibly be going much lower before we have another bounce. And I personally am not comfortable with selling at these prices. My long-term plan is to hold for roughly until not the next bull run, but the following one. Now, a lot of strategies out there would suggest that the best thing to do is to try and sell into strength and then buy in weakness, or continue to hold through weakness. So I would have loved to have sold a lot of my Ethereum back in November of last year, but let's face it, I think the bull run was cut a little bit short by the macroeconomic situation, and I missed my opportunity. So it looks like I also missed my opportunity to sell in this little recovery rally that we had. Now, will we head back up here, let's say maybe towards the middle of this coming week? I think so. I think we're going to see a little bit of speculation continue to push the price higher, but I'm kind of doubtful that we get back to 2,000 again. In fact, I think I'd be surprised if we got past 1,700. So something to consider, guys. I don't know if you can stomach going down to $262, but if you can't, if you're selling to cover power costs and stuff like that, yeah, best of luck to you there. So moving on, let's talk about Hiveon creating some new pools. So this was on their Twitter, and if you guys have been following my channel, I've been talking for several weeks about what is Hiveon going to do after the merge, considering the only two pools that they have are Ethereum and Ethereum Classic. And I speculated that I think that they'll change their fee structure and they'll create some new pools. That was confirmed about a week ago, but this is a pretty recent tweet from them on August 25th, and it talks about the merge, and it covers the basics, the minimum payout being 0.2 ETH and the GUI set at 80, but you will be able to get your coin out of there if you have less than 0.2. It says if you've mined more than 0.0025 ETH, you can withdraw your funds within 20 days from the date of the merge, which will happen around September 15th. Important note, after 20 days from the date of transition, there will be no way to request a payout. So, yes, stay on top of that, guys. Make sure you get your coins out of there. But really what I wanted to talk about here is, will you offer some other coin to be mined in the pools? Hiveon is not just the most extensive crypto mining ecosystem. We have created the best conditions, making mining on the pool as profitable and convenient as possible, and that's not about to change anytime soon. Our new mining options are being launched shortly, and they specifically name Ravencoin, Bitcoin, and Ergo. It does say and more, so it looks like we'll have additional pools coming, but they did it, guys. They did announce 3 specific coins that they will create pools for that are not Ethereum or Ethereum Classic. So I don't know if they're going to launch this prior to the merge or after the merge. I'm hopeful that they'll do it prior to the merge. But yeah, we're about to see a lot of hash rate migration and a lot of speculation. So buckle up, guys. It's going to be a bumpy ride. Next, let's talk about Hetzner and their anti-crypto policies. So this is an article by Cointelegraph. The terms of service laid down by Ethereum's second biggest host, Hetzner, prohibits customers from running nodes, mining and farming, plotting, storage of blockchain data, and trading. So they go on to say, just when the Ethereum ecosystem reached its final stages in preparing for the much anticipated upgrade, the merge, German cloud provider Hetzner reiterated its stance against allowing mining operations for both proof of stake and proof of work application. Hetzner, a private centralized cloud provider, stepped in on a discussion around running blockchain nodes, highlighted its terms of service that prohibit customers from using the service for crypto activities. However, the Ethereum community perceived the revelation as a threat to the ecosystem, as Hetzner's cloud service hosts nearly 16% of the Ethereum nodes, as shown below. Wow, that's significant. Look at Amazon here. Jesus. In crypto, the reliance of centralized service providers has been historically perceived as a negative trait when it comes to long-term sustenance, and for a good reason. Redditor Superman questioned the anti-crypto policies laid down by the second biggest Ethereum mainnet host, Hetzner, clarifying the doubts and legal implications associated with using its services for crypto activities. Hetzner stated, "Using our products for any application related to mining, even remotely related, is not permitted. This includes Ethereum." The company also stated that the non-allowance extends to running nodes, mining and farming, plotting, storage of blockchain data, and trading. While acknowledging the extensive use of its services for powering Ethereum, Hetzner revealed that we have been internally discussing how we can best address this issue. As a fair warning to the community, Hetzner added, if you or any other potential customer are unsure about whether your use case will violate our terms of service, please reach out to us. The latest revelation from German cloud provider Hetzner showcases the impact of the decision made by centralized entities on thriving crypto ecosystems. The majority of Ethereum ecosystem currently runs on Amazon.com, which hosts 54% of the total Ethereum nodes. Some of the mainstream cloud providers that currently host Ethereum nodes include Oracle Cloud at 4.1%, Alibaba at 2.8%, and Google Cloud at 2.7%. Discussions around the Ethereum upgrade have unknowingly spurred numerous misconceptions about what it means for the future of blockchain. Cointelegraph reported highlighted the top 5 misconceptions about the anticipated Ethereum upgrade. Anyway, so pretty concerning. I don't know exactly what Hetzner has against crypto, but I'm going to do a little bit more digging. I'd like to find out who the people are behind this particular company, and maybe we can get some insight as to why they are anti-crypto, because obviously this is going to remove a significant portion of their revenue, And obviously they have some strong convictions if they're willing to sacrifice that. So be interesting to find out. I'll be sure and share that with you guys whenever I get more information. Now, lastly, let's talk about Coinbase. Will it evaluate any potential forks following the merge? So, cryptocurrency exchange Coinbase has updated its information related to Ethereum transitioning to proof of stake to include forks that could arise. Now, I find this kind of weird that they specifically pluralized forks. It's not singular. I'm currently only aware of one particular fork for Ethereum proof of work chain to arise after the merge. I assume that anybody who forks it is going to have to disable the difficulty bomb, which they have already done. And of course, they're going to have to get backing from the other exchanges. But it is odd that Coinbase would not just come outright and say whether or not they're going to support it or they're not going to support it. So the article goes on to say, in a Thursday update to an August 16th blog post, Coinbase said it would evaluate any potential forks in the Ethereum blockchain on a case-by-case basis. Again, implying more than one, which is interesting. The crypto exchange previously said it planned to briefly pause Ether and ERC20 token deposits and withdrawals during the merge, expected to occur between September 10th and September 20th. Should an ETH POW fork arise following the merge, this asset will be reviewed with the same rigor as any other asset that is listed on our exchange, said Coinbase. And then it goes on to say, at Coinbase, our goal is to list every asset that is legal and safe to list. We will evaluate any ETH fork tokens following the merge on a case-by-case basis in alignment with our standard asset listing policy. Rest assured, all potential fork tokens of Ethereum, including proof-of-work forks, will go through the same strict listing review process that is done for any other asset listed on the exchange. Exchanges and crypto firms dealing in ETH have made announcements informing clients of any preparations needed ahead of the merge from proof-of-work or POW to proof-of-stake or POS. Many expect the blockchain's energy consumption to drop precipitously, scalability to improve, and the network will be less vulnerable to attacks. Sorry, I have to laugh about that one. It's unclear how crypto users might respond to a forked POW token listed on Coinbase or any exchanges as Ethereum transitions. On Wednesday, the platform launched an ERC20 token that will allow customers to use staked ETH while earning rewards. So, yeah, the fact that they pluralize this several times in here makes me think that perhaps there is more than one. And if there is, I'd like to know more information about it. I think we're all in consensus with Ethereum Classic being the go-to option if you want to continue to support any version of Ethereum. They've been around much longer, and if development is going to go anywhere, it would probably be there. But, is there more than one? I don't know. If you guys are aware of any others, please do me a favor. Put something down in the comments below. Share that with the rest of the community if you would. Speaking of which, if you like this content, please give me a like. Hit that subscribe button. Hope you enjoyed today's video. With that being said, I'm out.